This morning, we saw initial jobless claims drop to their lowest level since July of 2008. It could be another sign that the U.S. economy is indeed on a sustainable path to recovery in the coming year. IHS chief economist Nariman Behravesh joins us now from Lexington, Massachusetts, to give us his top 10 predictions for the economy in 2011. Nariman is a Bloomberg best. And Nariman, tell us where jobs fits in with your 2011 predictions.
Well, the good news is, as you're saying, that jobless numbers are down for the week. But in fact, the good news, the even better news, if you will, is that they've been dropping. The jobless claims numbers have been going down. The trend is very positive. And that's just one more piece of good news on the economy. The last couple of months, the news on the economy is much more upbeat, suggesting that growth for the fourth quarter, the quarter we're in, and the next quarter, the first quarter of 2011, is going to be close to 4%. That's good news in the sense that it will help to get that unemployment rate down a little faster than it's been coming down. So all good news for the employment picture.
But nevertheless, you expect a two-speed recovery, and you're saying that the recovery will be a little bit slower in the first half than in the second half. And this is even with the Federal Reserve buying bonds, trying to keep interest rates low.
That's correct. Well, you've got that going, but then separately, of course, you've got the stimulus plan. Nobody calls it that, but the tax cut extensions and the other things that were included will actually help growth. So growth will pick up momentum as the year progresses. So that's really good news for the U.S. But the two-speed that you're referring to is even as we approach, 3-4% growth, you've got the emerging world growing about twice as fast, 3 times as fast.
And as a result, there's going to be a divergence in interest rates between the emerging world and the developed countries. The UK, the US, Japan will likely keep rates unchanged for the foreseeable future, but rates in other parts of the world are going to head higher.
That's correct, yeah. Already they are, mostly in the emerging world, but even some developed economies like Norway and Australia have already raised rates, and they will continue to raise rates, and mostly because they're growing rapidly and inflation's a bigger problem there than, say, it is in the U.S.
And speaking of inflation, Nariman, we're looking at commodity prices soaring this year. Cotton, for instance, doubling in value, silver up 81%. You say this roller coaster ride will continue, but actually at a more moderate pace, even as the global recovery picks up. Why is that?
Well, the demand fundamentals will continue to push up commodities. Now, not all commodities are moving in the same direction. Some, especially the ones where there's a lot of speculative activity or investment activity, gold being a good example, or platinum, as you mentioned, is that those may see bigger increases over the next year. But on average, we expect to see commodity prices going up, say, between 5 and 10%, mostly as demand picks up around the world.
Okay, so supported by solid fundamentals there. What about the global imbalance? Everyone's been crowing about too much debt in the U.S., or complaining about too much debt in the U.S., I should say, and too much surplus in China. Does that improve any next year?
Not really. It's going to sort of stabilize. Let's take the U.S. deficit. You've got two sort of competing forces. On the one hand, we're going to get pretty strong export-led growth, which is good news, helps reduce our deficit. But on the other hand, as oil prices go up, our oil import bill is going to go up. So the two are going to kind of balance out a little bit. So we're not going to see a big improvement in our current account deficit. Same thing with China. It's not going to really come down very much.
All right, let's bring in Europe to this conversation, because you are saying that Europe and Japan are slated to improve in the second half. So I take it that means no big sovereign debt crisis blow up once again in the Eurozone.
I think that's right. They are making some progress in developing a sort of a system to deal and various pieces of legislation and agreements to deal with the sovereign debt crisis. I don't rule out the possibility that we could see another attack on the euro or another problem. But barring that, which again, low probability event, possible but low probability, we would expect to see things improve in Europe.
All right. Thank you so much for your time and giving us your top 10 predictions for 2011. That was Nariman Behravesh, the chief economist at IHS, joining us from Lexington, Massachusetts.